So there were some amendments in the way the cryptos were taxed, right? The cryptocurrency still remains a gray area. Still the amount of regulation and taxation needs to be improved, but there was some flat taxation which was being implemented upon the trading or whenever you were transacting into the cryptocurrency, and that flat transaction was 30%, right? So basically in India, the virtual digital assets such as the cryptocurrencies, NFTs, etc. are now subject to taxation whose capital gains are taxable at a flat 30%. Also, TDS is deducted at 1% of sale consideration, right? So basically in the cryptocurrency, we talk about further about the taxation. So basically it says, and this section will clearly talk about the in-depth taxation in terms of tax, in terms of TDS, in terms of charges which are being levied upon the cryptocurrency transactions. So it says income from the transfer of virtual digital assets such as crypto and the NFTs will be taxed at 30% plus 4% cess. Section 194S levies 1% TDS tax deducted at source on sale consideration if the transaction exceeds 50,000 or even 10,000 in some cases in the same financial year. No deduction except the cost of acquisition will be allowed while reporting income from the transfer of digital assets. Gifting of digital assets will attract tax in the hands of receivers. So even if you are gifting these cryptocurrencies, NFTs or some kind of digital assets which are linked to the cryptocurrency world, it shall be taxed in the hands of the recipient. So the person who is receiving such goods, he has to pay tax. The crypto tax applies to all investors, whether private or commercial, who transfer digital assets during the year. The tax rate is the same for short-term and long-term gains. Loss from digital assets cannot be set off against any other income, not even the income from other digital currency. Now the crypto gain should be reported under section Schedule VDA in the ITR, right? So basically, from selling, from trading, from swapping the cryptocurrency, everything shall be taxed at 30% plus 4% surcharge cess. Again, this is one thing to discourage the use of cryptocurrency, because even if this amount of tax is being imposed, having a 4% charge ranges to around 31.75 to 32% cryptocurrency transaction, again this shall be discouraged. As a result, many of the businesses have shifted their base outside India to multiple countries where the taxation rate is low or where you have nil taxation. Every transaction your tax will be there, even tax on gifting crypto. Right? Tax treatment on gifts differs depending upon whether it is money, immovable property or movable property. In budget 2022, VDAs were included with the scope of movable properties. Therefore, crypto gifts received will be taxed income from other sources at regular slab rates if the total value of the gift is more than 50,000 rupees. Crypto received as gifts from relatives will be tax exempt. However, if the value of the crypto gift from non-relative exceeds 50,000, it becomes taxable. The gift received on special occasions through inheritance or will, marriage or in contemplation of death are also exempt from taxation. Again, laws from cryptos, again you can't set off laws against crypto. For different type of cryptos, again amount, tax rate and TDS is being shared. Now further on, if we talk about the tax treatment for different transactions, buying and so 30% is straightforward on any kind of transaction and 1% TDS. So buying a crypto, selling a crypto, trading crypto, holding crypto, moving crypto between your wallets, airdrops of crypto, hard forks, gifts of crypto, donating a crypto, again that is taxable. Mining rewards, taking rewards, all these transactions are taxable. So basically in nutshell, we can say that on every transaction that is being done, 30% taxation is there flat plus a 4% cess and 1% TDS on a peer-to-peer transactions.